Well, I welcome everyone. Welcome to the accounting class. Today we have this problem to solve, and it's a fairly simple problem. But to be able to find the solution, you need to know a couple of things. Okay, and so without further ado, let's start. We have a company named Bright Future, and for which we have the balance sheet account. Okay, balances, and from those values, okay, and we are asked to determine the balance of the common stock account. So the, we know that you need to know two things. First, you need to know the accounting equation: asset equal liability plus shareholders equity. Okay, the asset of a company come from two sources: from debt or from the owners. Okay, equity, from contribution from the owner or from the owners. So you get asset, liability, equity. And number two, you have to be able to classify those accounts within the accounting equation. Some of them will be asset, some of them will be liability, and others will be equity. Okay? So the first account that we have balance for that is unearned revenue. Unearned revenue is a liability. Why? Unearned revenue. It's a liability. What is unearned revenue? Unearned revenue is money that a company receives from customers for services or merchandise that the company has not either rendered those services yet or given those merchandise yet, okay, for which they receive the money. So because of that, it's a debt for the company, so it's a liability. That's 25,000. Inventory. Okay, inventory, it's what the company has in stock to sell to make money or to use in in manufacturing, okay, to be able to sell to make money. So for that, it is an asset. You call that asset. Okay, it's 18,000. Prepaid expenses is also an asset. Prepaid expenses is money that a company disburse for services that they will receive in the future. Okay. So an example is prepaid rent. So prepaid expenses, it's an asset. We had 5,000. Common stock is an equity account. Common stock, equity account. Since we are asked to determine its value, its balance, so we call it X. We don't know it. Office equipment is asset. Office equipment is asset, 75,000. Retain earning, retain earning, okay. Retain earning is all the profit, accumulated profit that the company made, but the profit that has not been distributed, okay, to shareholders, okay, or to the owner. So call that, that's 12,000. So we're going to add them up, okay. Here is going to give you total 98,000, 25,000. The total asset of the company is 98,000. The debt of the company, 25,000. And the equity, that's that has two components: the common stock, which we're trying to determine, we call that X, plus the retained earning, which is 12,000. Okay. X, we're trying to determine which is the common stock. Okay. Equal 98,000 minus 25,000. Okay. And minus 12,000. Okay. And the common stock equal 61,000. This is the value of the common stock account. And here, this is the value of the common stock account. Okay, it's a fairly simple problem. However, if you don't know, if you're not able to classify those accounts, you will not be able to find the solutions. So this is what I had today. So please like and subscribe, and comment, and also let me know, okay, area in accounting that you'd like me to touch. And thank you for your time, and I hope to see you in the next video.